सो हाय एवरीबॉडी एंड वेलकम बैक टू आईंडी मनी। मेरा नाम है शगुन एंड आज का पॉडकास्ट आपके लिए बहुत यूज़फुल होने वाला है अगर आप ये फिगर आउट कर रहे हो कि 2025 में आप अपने फाइनेंसेस कैसे मैनेज करोगे। To help us with that, we have with us Mrs. Shaily Gang, who is head of mutual funds at Tata AMC. So, hi ma'am, how are you?
All good. Thank you. Thank you for having me on your platform.
So, ma'am, आज का we'll talk everything about personal finance. But before we begin that conversation, एक क्या हम एक बहुत ही सिंपल सी पर्सनल फाइनेंस की डेफिनेशन कैन वी गेट फ्रॉम यू कंसिडरिंग कि आज के टाइम में फाइनेंशियल स्पेस इज़ सो कॉम्प्लिकेटेड। आपके पास मल्टीपल इनकम स्ट्रीम्स है, मल्टीपल एक्सपेंडिचर स्ट्रीम्स है, तो हाउ डू यू टेक ऑल ऑफ दैट एंड क्रिएट अ डेफिनेशन ऑफ पर्सनल फाइनेंस?
So you have to have a very strong reason for you to invest. The need for investing is very well rooted in those reasons and deeply rooted. If it is, then obviously the actions come in. So inflation is one big reason. It's an animal. With inflation, every year 6% of your costs increase or your expenses increase by, let's say, 6 to 7%. And if you were to think about that if you want to maintain how you're living today and you want to continue to do that, it's very very important for you to have a investment plan in place.
Yeah.
The other reason is try to make a list of all the risks that you can face. Even if you were to mindfully make a list, it won't be possible to account for all the lists. Like
Yeah.
COVID was one, unscrupulous risk which was there. That's another reason, why one should invest, so that you can, at least have the threshold wealth ready when you are faced with different kinds of situations. Third thing is, of course, all of us have, aspirations, and each person has aspirations. And now you have, Gen Alpha, Gen Z, and the
Yeah.
kinds of aspirations and the way they want to live is changing. So
Mm-hmm.
if you want to have flexibility in life, that's another reason why you should be investing.
आई वॉन्ट टू आस्क यू कि ठीक है, चलो फॉर अ बिगिनर जो अपना फाइनेंशियल जर्नी बिल्कुल स्टार्ट करा है, फ्रेशर मे बी, हाउ व्हाट डू यू थिंक शुड बी द फर्स्ट स्टेप्स जो वो ले टू जस्ट फिगर आउट कि उनको अपने फाइनेंसेस कैसे मैनेज करने हैं?
Very broadly, the person should, have a broader understanding of the asset classes that are there. Equity, fixed income, commodity to some extent is there. There is a hybrid asset class also. And very broadly, the person should have an idea of the last 15 years or 20 years return and the risk attached to that asset class. Now, within that asset class, you have multiple categories of funds which are there. So, at the first step, I would suggest the person to have, the asset allocation ratio in place. There are
Okay.
many plans, or there are many scoring mechanisms which can be taken up, and you can have a score. So once that is done, let's say, for someone it has come out to be 80% equity and 20% debt. So that becomes your, bare shell for
Okay.
you to start planning. And within that 80% equity, one should have a good mix of active funds and passive mutual funds. And that could vary, the ratio between active and passive could vary from category to category. Largely for large caps, it could be more in favor of passives, but for mid cap, small cap, multi cap categories, and for thematic and sectoral, it could be a 70-30 mix between
Okay.
active and passive. And the 20% of the fixed income portion, could be, one part could be a short term fund, or a very short term fund to take care of your, let's say, a vacation goal or some near term goals. One part could be for your emergency fund, and there could be one part which is long term debt, which could be a locked in also, like a PPF, or you could allocate to a, corporate bond fund with a 3 year perspective, or a gilt fund, for the next 3 to 5 year perspective. So that is how you can start with, and you can overall, let's say, have between 12 to 15 funds as a pack under this 80:20 combination.
तो मैम आपने नीड्स एंड वांट्स की बात करी थी। हमारे पास अभी शॉर्ट टर्म नीड्स भी हैं, वांट्स है कि मुझे मे बी एक वेकेशन पे जाना है, मुझे अपने लिए आई वांट टू बाय सम ज्वेलरी और व्हाटएवर, सो शॉर्ट टर्म गोल्स एंड देन ऑफ कोर्स लॉन्ग टर्म गोल्स कि मुझे रिटायर होना है, पेरेंट्स को रिटायर करना है। आज के डेट में अपने इन्वेस्टमेंट्स को मैं कैसे बैलेंस करूँ दैट मैं अपने शॉर्ट टर्म एज वेल एज लॉन्ग टर्म नीड्स को मीट कर पाऊँ?
So whenever this thought comes, one should think of the 30-30 challenge, which is 30 years of work life and 30 years of life after work or retirement, or rather life after work. So if somebody is able to get that thought, the person will realize the need for this balance between spending now and saving for later. uh, Also, the longevity of life is kind of increasing now and has increased because of the developments in the medical space. So, more so, the probability of a person living for longer is higher. And you need to provide that period of time, you need to provide for yourself because you would not have no income. And certain needs would definitely go up, especially the medical needs. So, it's important for someone to think about, that phase also. At the same time, because of this proliferation of ideas, proliferation of social media, world is evolving. We are interacting more, through various forms. So obviously, you have more ideas and aspirations, and people have more ideas about the way they want to live and spend now. So you could also have certain, SIPs demarcated for some short-term goals, and certain investments which are demarcated for very, very long-term goals. Like, for example, if you want to plan a vacation after, let's say, a year or two, you would have a SIP running for that, for the next 1 year or 2 years, and which could take care of that goal. Or you want to buy, let's say, a expensive gadget 6 months down the line or 1 year down the line, you could start providing for that. So you could have smaller SIPs going in for your smaller goals, short term, near term goals as well. And of course, like we spoke in the previous section, how you can have your canvas of investments, planned in the 80/20, manner, the equity debt manner. You could have one part as this for short term as well, and the other parts could cater to long term.
Right. So, abhi already we've talked about a lot of diversification, right? Like just allocation ki high, debt ho gaya, equity ho gaya. Now we've also talked about short term, long term. So, can you like maybe in a very simple way help us identify कि for a beginner again कि अगर उनको they're just starting the journey तो उनको कैसे अपनी assets को allocate करना चाहिए? How much should they balance between all of the different investment avenues and how to go about that process?
Okay, so you could have the asset classes as equity, fixed income, and gold. Gold, you can have an allocation to the tune of about 10 to 15%, and let's say your overall equity debt allocation is, let's say, 70 and 20. Which is fixed income, and let's say 10 is gold. So if you are to operate in that manner, that 70% equity could be between active and passive funds. And in active, you could have large cap funds, you could have diversified equity funds, and you could also have some hybrid funds to take care of the market volatility in phases where the market volatility is very, very high. And you could have thematic or sector funds as part of the tactical mix. So under active, you could have a strategic or a core with diversified funds and, let's say, some bit of hybrid funds. And you could have tactical bucket filled in with the thematic or sector fund. Similarly, on the passive side, also you could have a strategic bucket, which would largely be funds which can be taken exposure to from a very, very long term perspective, like your broad market cap oriented funds. Some of the factor funds like Momentum, which has done very well in India over the past 15-20 years. So that can also be part of the strategic bucket, in under passives. Or you could have some broad-based thematic funds like a business groups fund or a sector leaders fund if there is. And in under the passives also, you can have a thematic or sector bucket. For example, right now, if the sectors of banking and financial services and pharma and healthcare, if these two sectors look very good from a valuation perspective as well as earnings growth perspective or margins improvement perspective, then you could have these two sectors taken exposure to from the next 3 to 5 years perspective, for example. तो आप ऐसे अपने पूरे portfolio को spread out कर सकते हैं. And as I also spoke about gold, So gold, there is a reason why you should have a perennial investment into gold because of its reserve currency status, as well as it is in great competition with US dollar, and more so as a hedge towards inflation and currency depreciation. So that's a very, very important thing.
Okay. Okay. तो अभी like I said कि in the beginning of the video कि this video is about people who want to manage their finances in 2025, right? तो अब नया साल है तो of course लोगों के mind में एक चीज़ होती है resolutions. So, do you have any resolutions in mind for people when it comes to finances जो उनको definitely 2025 में follow करने चाहिए?
So to do's, yes, I can think of a few things under that
Hmm.
list. One is the investors should focus on rolling returns
Okay.
rather than the point-to-point returns.
Hmm.
Point-to-point returns is just about calculating the returns for between two dates, and the probability of the investors coming on just those two dates is very, very low.
True.
Rolling returns take care. Basically, if you take rolling returns for a period of, let's say, 15 years or 10 years,
Hmm.
on each day, what is the last 1 year or 3 year rolling return, on each day that data is taken and an average is taken of all those observations.
Okay.
So it's a more realistic number or a realistic return number that comes out when you take a rolling return. If you would have
Hmm.
ups and downs,
जी.
still it would be considered and it would be a more realistic number. So that is something which investors should do. The
Hmm.
other thing investors should do is they should assess whether how prone they are to exiting the game of investments if they were to be faced with a drawdown, or if they were to be faced with a category which could, because see, there are high risk high return categories and high risk high return investment avenues as
Hmm.
well. So the
True.
returns are high but the risks are also high. If as an investor the investor feels that in the moment when the actual event happens and this happening of or the drawdown of the fund happens, and the person, the investor, cannot take it and eventually exits the game, it's
Hmm.
better to be in a lower or relatively lower risk reward investment avenue and
Hmm.
continuing that investment for about 5 years, 10 years, rather 20 years of time.
जी.
So it's very, very important to do that. Getting into 2025, investors should continue to hold on to their emergency funds or create one if they haven't.
Hmm. Hmm.
Anyone, between 6 months to 12 months of their annual income. So,
Hmm.
as in 6 months to 12 months of
The
6
salary.
months salary to 12
Hmm.
months salary
जी.
is what is the quantum of emergency funds which the investors should look at, or they could
Okay.
have 10% of the overall financial portfolio as emergency funds. We did speak about gold,
Hmm.
quite in detail, and if they don't have a gold allocation, we would suggest them to add gold to their portfolio.
Hmm.
So yeah, looking at rolling returns and
Your
assessing the
emergency
risk
fund
reward
also. Hmm.
and standard deviation of the fund categories and the funds, holding on to the emergency funds, allocating
Hmm.
to gold. And there are a lot of features which are smart features which are now there, like a systematic withdrawal plan
Yeah.
or a systematic transfer plan.
Hmm.
And investors should actually uh, try to have a SIP or a STP in their accumulation phase, and towards their withdrawal phase, rather than taking dividend option, they could attach an SWP option to their corpus. What they
Okay.
should not do is buy the fund today and attach an SWP just tomorrow. In their
Hmm.
accumulation phase, it should largely be every month of investing through STP or SIP and taking exposure to markets and
Hmm.
compounding.
Hmm.
And when they are in the withdrawal stage, maybe post 60, 65, that
Yeah.
is when an SWP can be attached as a feature. So people should make use of those smart features, we feel.
ओके। तो मैम अपने आप SWP के बारे में बात कर दी तो कैन यू लाइक बहुत ही सिंपली कैन यू एक्सप्लेन व्हाट इज SWP?
So it's a systematic withdrawal plan,
Hmm.
and when you withdraw via an SWP, you get in the withdrawal, you can define an amount of SWP which you would want to attach to the fund or the fund corpus,
Hmm.
and you would have that amount coming in every month or every year, whichever way you set it up.
Hmm.
And that amount would have a mix of principal and the return payout also. So you are
Hmm.
also getting your principal back, and your whatever return ratio is there, whatever return you've made on the overall corpus, in that
Hmm.
tranche, that part is also coming out. So it's more
Okay.
tax efficient from
Okay.
that perspective as compared to dividend.
Okay. Got it.
But that should be taken only when you have a real need for withdrawals and incomes, and as I
Hmm.
said, towards the withdrawal stage of your life.
अंडरस्टूड ओके सो मैम अब इन्वेस्टिंग की अगर बात करते हैं ना एनी टाइम एनी वन स्टार्ट्स इन्वेस्टिंग पेरेंट्स का एक बहुत ही माइंडसेट है कि एफडीज में इन्वेस्ट करो राइट एंड लेटली न्यूज़ में देयर हैज़ बिन दिस थिंग गोइंग ऑन कि एफडीज पे इंटरेस्ट रेट्स इंक्रीज होने के अब चल रहा है सो व्हाट इज़ लाइक योर ओपिनियन कि स्पेशली व्हेन इतने सारे इन्वेस्टमेंट एवेन्यूज है लोगों के पास डू यू थिंक कि एफडीज अभी भी एक रिलायबल एवेन्यू है फॉर इन्वेस्टर्स
Fixed deposits, yeah, if you do the overall, map the overall savings of the investors in India or the people in India, FD is a big bucket.
हम्म.
But FD has predictable returns. So,
हम्म.
yeah, from that perspective, predictability is there, but yes, the taxation is also quite high. And
हम्म.
when you think about, you having the money for a very, very long period, in
हम्म.
that case, equity as an asset class is more suited. Why? Because of two things. One, in the longer period, each stock, the
हम्म.
stock prices track the earnings growth of the companies.
हम्म.
And over a period, you could have mispricings ups and down in the interim. But over a period, if good quality stocks would track the earnings growth of the companies,
हम्म. हम्म.
and the second reason is that as time increases, the probability of a investor losing money into equities really reduces, and in fact goes to almost zero beyond 5 years and 7 years.
हम्म.
So these are two reasons why, for a very long-term perspective, if a person has a view beyond 5 years, 3 to 5 years rather, the those monies should be going towards equities rather
Okay.
than a big pot being, put aside in fixed
हम्म.
deposits, because there you will get a very, very predictable but a very limited return.
Right. Okay. Okay. So now that we're talking about all of these avenues and everything, investment is great. I absolutely agree. But also, I think कहीं ना कहीं people also have to have that balance of how much they're spending. क्योंकि अगर आप पैसे बना रहे हो, you should also have the joy of spending, right? Do you have any advice for people who want to balance how they're spending money and also how they're investing? तो वो split कैसे create करें without actually hurting your investments?
So, first is, if you have liabilities, whenever the monthly income comes in, your liabilities should be struck off. After
Mm-hmm.
that, whatever is left, I think a good portion would be 30% of that remaining money should first then go towards investments, and
Okay.
then within the balance remaining, you could spend on essentials and luxury and ad hoc items, travel,
Hmm.
everything.
All right. Okay. So basically, like first put your money aside for your investments, और फिर उसके बाद you can use your money, right?
Yes.
ओके ग्रेट अब मैम अज्यूम करते हैं कि आफ्टर वॉचिंग द वीडियो किसी इंसान ने अपना एक फाइनेंशियल प्लान बना लिया है राइट अब हाउ ऑफन शुड अ पर्सन कीप ऑन रिवाइजिंग देयर प्लान्स कि ठीक है अब बहुत टाइम हो गया अब मुझे इसको रिवाइज करना चाहिए या एडजस्ट करना चाहिए तो व्हाट डू यू थिंक शुड बी द फ्रीक्वेंसी और किस कंडीशन या सिचुएशन के अंडर अपना फाइनेंशियल प्लान रिवाइज करना चाहिए
So, if there are any specific events, any unique events, then even if the financial analysis or the review was done very recently, it should be done again. Even if it was done, let's say, 3 months ago, it's time, if there is a unique event happening, like we had the COVID, which hit us in March,
या
March
2020
2020. Or I think annual is a great frequency. It's a good frequency for anyone to review their funds and investments. And then deep diving into the funds, if you were to see, it's very very important for a person. So before reviewing of the funds, it's important for the investor to understand the canvas of the fund manager and the type of fund managers that are. So there are fund managers who manage portfolios of 120 and 150 stocks, and
जी.
then there are others who manage very very concentrated portfolios of 20-25 stocks, and then you
Hmm.
have fund managers which move between 60 to 70, 75 stocks, or let's say sometimes 45 to 65 stocks,
Hmm.
depending. So 60. So now in that case, what happens is, in case of market phases which are broad based, where everything is moving up, in those
Hmm.
kind of phases, the 120, 150 stock portfolios would do better, and it's possible that the 40, 45 stock portfolio, or the very concentrated portfolios, might underperform for
Hmm.
a bit. It's
Hmm.
possible. Or if there is a very narrow market, then this concentrated portfolio would do well if the stock picks, those 20-25 picks, are the ones
जी.
which are actually leading the market rise.
Hmm. Hmm. Hmm.
Or if there is a stock specific, if there is a market phase which does not have a thematic narrative, which means it has a specific stock specific narrative going on,
Hmm. Hmm.
and in that case the 645 to 65 portfolio would do well.
Okay.
It tends to outperform, whereas the very very wide portfolio might underperform. Now,
Hmm.
it's important for an investor to first identify the fund managers into any of these types and portfolio construction philosophies, and then let the fund manager at least be there, run for a full cycle. What happens within that cycle is, the fund manager should ideally, his outperforming phase, or during his outperforming phase,
Hmm. Hmm.
he would outperform by a much higher margin
Margin.
than what he underperformed during the other phases.
Hmm.
So
Hmm.
then in that case, one full cycle really helps, when you stay invested through one full cycle and
Hmm.
then
Yeah.
assess the fund manager.
Right.
So that's very critical.
तो पता है व्हेन यू गो ऑन सोशल मीडिया ना देयर इज अ लॉट ऑफ हाइप अबाउट अ लॉट ऑफ डिफरेंट थिंग्स राइट तो बहुत लोग दे टॉक अबाउट अ लॉट ऑफ एवेन्यूज दे टॉक अ लॉट अबाउट इंस्ट्रूमेंट्स दे टॉक अ लॉट अबाउट सेक्टर्स एंड थीम्स एंड कंपनीज तो देयर इज अ लॉट ऑफ फोमो ऑन द इंटरनेट कि यार आपने इसमें इन्वेस्ट नहीं कर रखा यू आर मिसिंग आउट सो हाउ डू यू थिंक यू नो समवन शुड this control that urge and balance out how much and should they even invest in a new investment, so do you have any tips for that?
So one portfolio should, the first layer should be of, as I said, asset classes:
Hmm.
equity, debt, or equity, fixed income, commodity,
Hmm.
and obviously hybrid asset class also is one which is a mix of equity and debt.
Right.
Under that, you could have, as we spoke about, various categories under active and passive.
Hmm.
So that would be covered. So you would have sectors getting covered there in the diversified funds, and some of the thematic and sector funds also would cover certain sectors which are being where the house views are bullish.
Yeah.
So that would get covered there. On the fixed income side, if you are spread well against across the duration products, long in duration products, and the what you call accrual products at the shorter end, you would have covered that space largely.
Hmm.
And through the gold or multi-asset funds, which also have up to 25% all kinds of commodity exposures,
Hmm.
whether it is through industrial metals or precious metals or some agri products. All these things are covered there. So through
Hmm.
that route, you would have covered the commodity space largely as a retail investor.
Right.
So, plus outside of this purview of MFs, you could have NPS,
Hmm.
which is, retirement, avenue, and you could have PPF, which is a long-term debt-oriented avenue. You could also have Sukanya Samriddhi for its tax benefits for, girl child. So out
Hmm.
of this mutual funds, you could have these two or three more things, or more investment avenues attached to your portfolio. And on the insurance side, for to avoid, so this is all about managing the
Your
risk
investments.
of
Hmm.
risk of dying early.
Hmm.
But if you have to also manage the sorry, this is all about risk of living too long. I'm so
Okay.
sorry. This is about the investments. Investing is about risk, managing the risk of living too long.
Hmm.
And the insurance piece, which is the term life insurance, is about managing the risk of living too short. So
Yeah.
I think through this you could manage, both the things. And then cherry on the cake could be, having smart features attached to these portfolios, so that you keep accumulating during your
Hmm.
accumulation phase and earning phase. You could have a pause for your investments to grow, and then during your withdrawal phase, you could start withdrawing from there.
Okay.
uh, so I think that's the overall and while you do all of this, it's very important to also map what part of the monies are long term and what
Hmm.
percentage of the monies are short
Short
term.
term.
So when you are deciding the categories, you could map the long term short term piece, and all of this needs to have a larger umbrella of the risk profiling.
Right.
So that's the overall guidance.
All right. So, ma'am, great session. And without taking too much of your time, I'd love to ask you if you have any parting advice for people जो अपने finances इस साल genuinely अच्छे से manage करना चाहते हैं.
So I think you should prioritize, planning and understanding and absorbing on the investments, rather than, procrastinating or delaying that.
Hmm.
Do not stop your SIPs. It's very, very important. The last 30, 40 years, the Nifty 50 index and Sensex index, which is representing India, which is a good representation of
True.
Indian economy, that has
Hmm.
given around 13 to 14% CAGR returns. You all this entire period would have seen so many events happening, economic,
Hmm.
financial, economic, and some unique events,
Yeah.
which never seen before events. But in spite of all of that, if 13 to 14% CAGR is coming in, it means the steps should not stop unless you need the money, or unless it has been a long, long time that you're already contributing.
True.
So that's very, very important. The risk of staying in the market can be very well managed by what you invest in.
Hmm.
But the larger risk is when you stay out of the market and you are just watching the indices to indices rise by,
Yeah.
as I would say. Markets are never linear in the very short term. When you step back and take a longer term look, they are linear,
Yeah.
upwardly linear. But in the short run, they could be non-linear. But that should not deter you from continuing your investing and systematic investment plans.
Right. I think that's a very important message. Like you said, ki short term mein, it is not linear, but when you look at it from a long term perspective and from that lens, you'll see just how much growth there has been. So that's a really important message. And thank you so much. It was a great session. And I really hope ki jo bhi audience se dekh rahi hai, I really hope that this year they manage their finances better. So thank you so much, ma'am, and really a great time.
Thank you. Pleasure being here on your show. Thank you, Shagun and
Thank
team.
you. All right.
Investment in the securities market is subject to market risks. Read all the related documents carefully before investing.